Are you looking at buying your very first car and then you need to also look at buying insurance for the very first time? You're a little bit overwhelmed by all the options that you've got to take a look at and all the different prices, and you're wondering what's the real difference between the different prices of the insurance and all the different coverages, and what do I really need anyway? If that's you, then I'm going to try to see if I can help you out here in this video, where I'm going to cover 6 essential tips for first-time car buyers when it comes to insurance. I know it can be a daunting task, right, to try to understand all the different things in there. So I'm going to try to help you understand and break it down for you so that you can make a clear and informed decision when it comes to buying your insurance. So also you just don't overpay for what you're buying. The first one is going to be understand the types of insurance that are available. There's a lot of different coverages, and you need to understand that car insurance isn't just one size fits all. You need to familiarize yourself with the different coverages that are in there so you don't overpay for the insurance and buy stuff that you just really don't need. The number one thing that you need to buy is going to be liability insurance. Liability is a limit of insurance, basically a bucket of insurance that takes care of covering damages that you cause to other people for their property damage and then also for their bodily injury. This is, like I said, a bucket of money, basically. It's kind of like a checkbook, and it has a limit on there. So if you take a look at the policy and you see that you're buying $100,000 of liability insurance, that means you basically got like this checkbook, access to this checkbook of $100,000 that you can pay claims off of that you are found to be responsible for. This is property damage, this is vehicle damage, this is medical bills, this is rehabilitation, this is surgery for someone else that you caused an accident with. This is a very important piece of the coverage that you need to have, and it's typically required in most states. The second thing is going to be collision. Collision covers repairs to your own auto if it's in an accident. There's not other insurance, you have a collision, or you turn the car over, this is what will fix your car. There's going to be a deductible in that. It may be $500, $1,000, maybe $2,500, but that's how much you pay first. Then the policy pays after that based off of what the market value or the actual cash value basis is of your car. Understand underneath comprehensive and collision, the next thing we're going to talk about, they do not buy you a brand new one. They're going to buy you like in kind, or fix it with like in kind. So the next thing is comprehensive. I alluded to that just a second ago. Comprehensive is, it covers non-collision damages like theft, weather, vandalism, glass breakage, all those different things underneath that. Again, there is a deductible. You pay that first, then it takes care of it after. The next thing is going to be uninsured motorists or underinsured motorists. Now, if you get in an accident and you're not at fault and someone else caused it, and they either don't have enough insurance or they have insufficient insurance, then this will take care of fixing either your vehicle or taking care of your medical bills. A scenario is you're driving, you get in an accident, the other people are at fault, they don't have insurance or enough to take care of your medical bills or to fix your vehicle. This can take care of that. So know each of the different types of coverage and determine what combinations best suit your needs and your budget. But those are the 4 primary ones that I usually suggest that everyone buy. The other things, you can decide if your budget allows for it or not, but you need to at least address those 4 things and buy those 4 things. The second thing is going to be use an independent insurance agent. An independent insurance agent is someone who represents a lot of insurance companies. They don't represent just one. There's companies out there that are captive or exclusive agents that work for a single company. Those work for the company, not for you. An independent insurance agent works for you, not the insurance company. They have your best needs in mind. And most of the independent agents live by this creed, basically like these 4 principles. Our agency lives by these 4 principles. And it is, number one, we're going to make sure that your insurance does its number one job. Its number one job is to protect you and your assets. Look, you got stuff. You got a vehicle, you got a home. If you don't have a home now, you eventually will. You're going to have savings, you got ability to earn a living. All these different things are what makes up your assets, and your policy needs to protect that. So if you get in an accident and there's a lawsuit against you, the insurance takes care of paying the bills, not your assets. Because if you don't have enough insurance, then you're gonna have to write a check for whatever those differences are in the expenses. The next thing is gonna be, we wanna make sure that you understand what you're buying. Look, you're gonna spend a lot of money on this. You deserve to understand. If the agent won't spend the time to help you to understand, or you just don't feel comfortable, move on. There's a lot of other agents out there. Number 3 is we're gonna make sure that it fits your budget. Hey, if it can have all the bells and whistles, but if you can't afford it, then what good is it? We will help to tailor it to make sure that it fits your needs. And lastly, you're gonna go through a lot of life stages, and your coverage needs are not gonna be the same through each one of those stages. A good agent will help you to understand and make sure that policy fits those different stages. Look, think about it. You know, right now you're just starting off. This is the first time you're buying a policy. You don't own a lot of stuff. You know, so your needs are not as big now as they will be later. You still have needs though that need to be addressed, and that agent needs to understand it. Then you get to the stage where your kids are now driving, where your exposure just went up significantly because they're young, they're inexperienced, they're distracted. There's a lot more potential for accidents. You need to protect your assets because of that. Also, they're out on social media and other things, and things just happen out there, and lawsuits can follow. Then once your kids go off to school, and then finally, once you become an empty nester, each one of those stages, you have very different needs. Your agent needs to understand that and change your policy and your coverages to suit the stage of life that you're in. Number 3 is Google your agent. Do a Google search on them. It shows you a few things. One, you can see, how do people think about them? Do they have a big presence? You know, are they embracing things that are, you know, like being online, to see, are they still behind the times? Are they with the current times now? Do they have some sort of social media presence? Check those things. You know, and when you look at the Google reviews, don't just look to see, did they save people money? See, are there other things like claims experience? Did they help you to understand the policy? You know, are they patient with you? Look for all these different things, not just did they save people money. Saving money is great, but you really need to know they're going to be a good risk manager for you. The next thing is going to be, don't skimp on liability and limits. Don't buy these down trying to save money. This is not the best place to save money. The difference between $100,000 and $300,000 liability limits is not very much. And then also in the long run, you get in an accident, you bought $100,000 and you needed $3,000, you're gonna pay the difference between those if you have an accident that's over that policy limit. And that could cost you a lot of money for a lot of years. Number 5 is consider higher deductibles for lower premiums. If you wanna try to save money, this is where you do it. Instead of buying a $500 deductible, maybe you buy $1,000 or $2,500. Look, you don't need to file small claims anyway, because you're going to have in that policy built in discounts for not having claims. As soon as you turn in a claim, you're going to lose that discount. Make it worth it. If you're going to lose the discount, make it worth it. Don't file a claim that's $1,000 or even $2,000. Let it be a larger claim. So if you're going to file only big claims, then also just go ahead and save the money on the premium up front and take the bigger deductible to begin with. Number 6, and I think this is probably the most important, is bundle to save. And there's a lot of reasons why you want to bundle to save. You know, you can save with discounts, you can save with shared deductibles, and you can also save with better coverage options like diminishing deductibles and cash back. You know, and potentially you may wind up needing home or renter's coverage anyway. But the most important reason is, when you're hiring an insurance agent, when you're buying a policy, you're hiring a risk manager. That's really what you're doing. You're hiring somebody that's going to manage the risks that you have in life of owning a vehicle, owning a home, you know, traveling or working or just going about in life. You know, you have exposure to things happening. Everywhere you go, everywhere you drive, something can happen. You can make a mistake and something can happen. And a lawsuit could entail from that, or you may just have property you need to replace. That is what the job of a risk manager is, to make sure that you've got most of your exposures covered while trying to keep your costs at the minimal. If you have a single agent, an independent agent, then they can understand where you're at in life, where your life cycle you're in, also all the different policies you have and what you own, so they can make the best determination of what that package is that you need. And they can save you the most money by doing so. Not just on premium up front, but also when claim time happens, making sure that the amount that you pay out of pocket is minimized. So once you've chosen a policy, don't just set it and forget it. As your life changes, new job, moving, etc., going through the life cycles, your insurance needs may change too. Regular review coverage to ensure remains the best option for you in your circumstances. That's why you need this single agent that's a risk manager for you, so that they can adjust according to the best value. Hey, I hope these tips help you out as you're buying your very first car and also becoming the very first time you're buying auto insurance. Hope they help you out. If you got any questions, hey, put them in the comment section. I will answer any questions that you have. I take a look at every last time we get a question and I respond to them and try to help you out as best as I can. Make sure you hit that subscribe button and also hit that notification bell, and make sure you hit that thumbs up on this video if you enjoyed it and if it's beneficial to you. Appreciate you checking it out. My name is Beaux Pilgrim.